on day 4 of the Singapore Fintech Festival. It is the Investment Summit. And we cannot talk about investment without mentioning, of course, venture capital and what goes on behind the scenes. So let's get back on track with our content session. We go to the 5th behind the scenes episode to have a better understanding of investors' priorities in 2021. We have a panel of investors that will share with us whether their investment thesis will change in the coming year, 2021. Also, what advice they're giving to their portfolio companies and have delivered any surprising outcomes. So moderating the panel is Fabian Wesemann, who is co-founder and Group Chief Financial Officer of wefox Group. Also, he's joined on the panel by Reshma Sohoni, who is the co-founder and managing partner at Seedcamp, Luca Bocchio, who is partner at Accel, and Rob Moffat, partner at Balderton Capital. To pose questions to the panel, all you have to do is click on the yellow button that's beneath the session window. So let's join Fabian and his panel of investors as we go behind the scenes for venture capital.
Hello, so welcome everyone. So I have the great honor to turn things around today for once. So normally I sit on the other side and I get the questions, but this time I can turn it around and I have a great group of investors here with me today. Reshma from Seedcamp, Rob from Balderton, Luca from Accel, Stefan unfortunately not able to join, last minute family incident. But really looking forward to speak with you today. And so let's start right into it. So quickly towards me. So I'm the founder of wefox, digital insurance company, really with its own proprietary advisor channel. But it's not about us, not about me, but it's about this great group of investors that we have around. And what I always wonder and what I'm always interested in, so what are you guys actually doing all day, right? So you don't have to run an operational company. So tell us a little bit about it. Is it more like having coffees with founders? You know, that sounds like a pretty good life. Or Rob, is it you? You're playing the piano. So what is it that you guys are doing all day? Wow.
Yeah, just playing piano very, very badly. My practice hasn't helped.
Yeah. It looks like you need a bit more practice, no? So is it actually a lot of work that you're doing every day, yeah?
Lots of Zooms back to back, as I'm sure most of us have had this year. But yeah, the market's never been busier, honestly. It's a lot of conversations going on.
Great. Yeah. So I mean, there's quite a lot going on. There's been quite a difficult year for, I think, companies, but also investors. So do you have a bit of like some war stories for us so that we can learn a little bit, something that happened maybe throughout this year or also in the previous year where you kind of went in, you supported a company that was in a difficult situation and you were able to overcome it, you know? So a little bit of the secret stories that we would love to learn a little bit here behind the scenes.
Maybe I'll start off. Should I do that?
Please.
Yeah.
Okay. I mean, I think maybe just, and it works within the intro as well. I think you have a group of investors here who are at different stages. So just to contextualize, maybe, you know, my stage, we run into different problems, and others around the panel here run into different problems. So for us, you know, we focus very much on the 0 to Series A journey, and we focus on pre-seed and seed across the European footprint. So trying to really get to that product market fit and then early traction. So what are the problems we run around, or run across? I would say they're not like dramatic in terms of what PR takes on, right? Which happens in later stages, and that's dramatic. I think though they're very dramatic for our founders. So in that we run into a lot of founder disputes. That's probably the biggest thing, because, you know, when everything's going to up and to the right, it's actually really happy, often like quite happy atmospheres, right? There's a little bit of tension in growth, but it's actually roughly pretty happy. And I think so a lot of the challenges we see is around when it's a real challenge to find that product market fit, find any customer out there willing to pay and not just kind of, you know, live off for free off of your solution. So we hope to be that protocol for those founders is working through that. And I think one of the biggest things we do is to say, hey, look, if we're going to break up, let's do it fast too, and not have a lot of resentments and things build up. So I think that's the biggest thing, is we really work on that. Is and you'll hear some, we have some success stories, as well as obviously a lot more, I would say, failures where that founder dispute got resolved in some way, of course. But even in a success story, it's not all smooth sailing. I mean, there's a lot of challenges around how different people grow into different roles, is, especially with bigger co-founding teams, more than 3-4 people, is who's really doing what, and are you sort of value add, and are you here long term for this business, or really we're just good for that first 6 months. So lot to wade into there. And then I do think, passing it on to Rob and Luca then, is when the problems become different and past that stage, I do say we tend to kind of pull back a little bit and really hopefully are good partners with Luca and Rob to also present a unified voice into companies and founders, because alignment in the investor base is also really important for some of the challenges that arise. But I'll let them take that on.
Yeah, happy to continue from here maybe, and thank you, Reshma. I think going back to your question, Fabian, this year a lot has happened, right? So if I think about a war room moment, I think it's been way centered around first wave of lockdowns. I think most of companies and most entrepreneurs, especially the younger ones back then, had a lot of difficult moments. And I think that difficult moment was many times also more psychological rather than business related, because they needed to take difficult decisions. They had, for the first time in their life, somehow a situation where they couldn't get the light at the end of the tunnel. They might have a problem of selling their products, whether they've been centered around software or were related with consumers. Some sector completely switch off, and employees got nervous. So I think this year we've been, for the first part of it especially, trying to help them navigating those situations, leveraging a bit more experience of what crisis management could look like, but also how to remain somehow more positive and center around the core of what they're doing, which is building usually interesting product that serves consumers of businesses. And that has served as well, in my mind, as good partners for them to help them navigating this. And I think going back for a second on what Rob said, and the reality is that it's been one of the busiest years for this industry as a whole, because we've all seen how incredible has been the reaction, not just in global markets, but more importantly, in adoption of technology all across the board. And that has been keeping us pretty busy. So what are we doing all day? Usually it is very much meeting interesting entrepreneurs, at the same time working closely with the one that we already partnered with, which means a lot of interaction with them and continuous interaction with the broader team, and trying to help on crucial points such as hiring great profiles of people, or working on strategy and business development as a whole. But also, honestly, really a lot of human interaction, because in the end, we are in a people business. So we do tend to spend a lot of time with people like you when we end up deciding to work together.
And can we speak a little bit about this point also? I think because they are kind of interlinked with kind of founders dispute, the psychological kind of reactions to this year, but also when you say kind of meeting people, right? So, I mean, as we see right now, we're all at home, right, in our different kind of houses. Obviously, Luca wins with the background, so he's in Bella Italia, so we have to give him that. But in this world that we're living in, it's much more difficult to meet in person. How do you think this influences also the support that you can give, whether it's across kind of solving a dispute, whether it's around, making a investment decision, or also supporting people, from, corona-related psychological issues that arise?
So I think it's a really good point, and it's not being straightforward. I think two things I could talk about. One is how we make the investment decision. A huge part of what we do is investing in people. And it is hard to do that when you're not there in person with someone, and you can't go for dinner, you can't have that social interaction. So to get around that, I think we overinvest in spending a lot of time on Zoom. We have a more structured way to assess founders now, and sort of think through a framework and what is it really excites us about this founder? What's their real spike? What makes them really exceptional?
So what is that framework? So for everyone out there who wants to get a Balderton investment, please listen up right now. So Rob, tell us, what's that framework? Tell us right now.
We'll try and game it. And that's we see it on a bunch of pitch decks, right? The sort of classic Y Combinator pitch deck is so gamed now, it's not interesting. But no, classic areas like, are they incredibly smart, right? Nick from Revolut is incredibly off the charts smart. Are they incredibly driven? Again, Nick from Revolut, incredibly driven founder. Or are they a fantastic storyteller? Or are they a fantastic team builder? And there's a bunch of different areas, and I think every founder has got their sort of certain superpower. But I think spending time on that and really pulling that out, I think, is what marks out the great founders from the very good.
Yeah, and Reshma, I know that you have a very structured process, kind of going through it. I mean, probably from everyone around, probably you see the most pitch decks and the most companies, I'd say, because you're looking at kind of the first part, the really early stage. Do you want to tell us a little bit more around kind of how your funnel works? And then maybe Luca, for everyone who wants to get an Accel investment, you also tell us what your framework is, so that we know it for Rob now, but so maybe it would be also interesting for Accel.
Yeah, no, and I mean, I think part of our job, because we're doing, we say we do a new investment every 10 days. So we have to push ourselves into a process and also into a decision making that's just got a fast clip to it, right? And so I hope that and we've been doing it for 13 years. So I do hope that a lot of the qualities, Rob mentioned is something we can really pick up on. All of Accel, Balderton, and us are in a company called Primer. And when you meet those founders, it's like, yep, that's, tick, 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 right? Hop in, which I often tell people, we met them for 40 minutes, but within 20, we were like, right, you can't leave this room. You must sign this, term sheet with us, right? And I think you and Julian fall into that. We're proud investors in wefox as well. So I do think hopefully, we're good at that. But I have to say, Europe as a geography has come up significantly. I think the job of doing that has gotten harder. So we've instituted more and more sort of just curation gates to keep kind of, it has become much more competitive. It is much more relative assessment now. Whereas 5 years ago, 7 years ago, I think we could be like, that is just the best founder we've met. Like there isn't anyone even close. And now it's like, gosh, they're all pretty, they're reading the same thing. They're sort of following but still, yes, you sort of, meet the spark. And I think in deeper tech, some companies are very much more user experience, product experience layer, all the way down to how deep a moat with technology you can, build around you. And so I think our process also elongates when it goes deeper. And we've got to drill into that a little bit. But we also, as the other element I'd add to, some of the things Rob mentioned are just really getting into the long-term moats you can build, the differentiators, and especially where tech is involved to try to really assess that. But I think I will just say that it's become more and more a relative game because the strength globally of founders, it's just immense what it's become over the past decade.
Yeah, and I will add to that, I think it's a great segue. I mean, I think what is becoming more relevant now, it is really getting our own view first, right? And not just focusing on being somehow reactive to what interesting teams and interesting funders can bring us to the table with their pitch. But it's getting really to a level, thanks to the quality of the founders and people, as Reshma was actually saying, that you need to have somehow prepared view on a specific trend, a specific market opportunity, so that when you meet founders that are playing into those trends, you can quickly align and understand if there is a great spark in terms of how also you see the future. Clearly, our market is becoming not just more competitive, but simply more sophisticated. I think we're seeing greater availability of talent and actually a repeat entrepreneur and seasoned executive people that have been able to achieve great things in multiple companies that are now taking to the next level the challenge of creating a new business. So what we're seeing now is that on our side, we need to be ready for that. And the only way for being ready for that is being verticalized a bit more on our side, but also develop our own thesis in the most important trends that we feel excited about.
Yeah, very interesting. And let's maybe dig a little bit into that part. So quality of people, right? So I think that's what unites. How do you think across the different stages, right, that you are investing in? So Reshma a bit earlier, you guys a bit later. So how do you think this quality of the people actually kind of is different across the different styles? While at the beginning, maybe it's a bit more around, how driven you are, these qualities likely change. So what do you think differentiates us or you guys in your investment decision when you look at assessing the quality of the people?
I think to me, there's a core of great founders, which is consistent across stage. And I think it comes back to, things like the vision and the drive and the intelligence. And then some founders have an ability to sort of learn additional skills beyond that. So learning how to build a team, learning how to manage a multi-layer team. There's often a big switch is where you go from managing everyone yourself to managing middle managers. And that's a really tough transition to make. And some founders do that perfectly, and some decide at that point that it's time to get an external CEO into the business. And so we see a bit of both. So I think there's learning skills around financial skills, there's learning presentation skills, how you talk about the business in a more compelling way. But those pieces can all be learned. I think it's, what's at the core of you that really matters.
I think it's I just want to pick up on the talent growth point. I think it's such a good point. Because again, we have a larger portfolio at the beginning, and look, we're also helping our companies, vying for the attentions of Balderton and Accel and the US Sequoia and so forth. Is we see some sort of companies kind of hot at the beginning, right? But they can't, as Rob rightly said, they can't get to that next point, right? And it just still is about them. They're not bringing on the really amazing talent group of operators that takes things to the next level, that allows you to scale. And I think some founders do get caught up in their own rock starness of it, or their control, how control freak they are or whatnot. Again, those are some of the problems we get into, and just sort of fizzle out. And then those ones, that step out and are, Hopin again has been scaling so fast. And it's amazing to watch Johnny, kind of lived and breathed this product by himself, actually just sort of let go more and bring on different functions and really high quality people and seek that kind of quality of people. So I do think that talent, sophistication and evolution is a really great point where we see our companies kind of get through that Series A bottleneck, and a clear kind of stage where they get differentiated and then sort of either fall back to earth more or pass through, right?
Yeah, so that scaling part is obviously a very difficult one. That is a really tough one. I can speak also from experience. You need to stay strong, and stay hard at it. You're going to have lots of difficulties that you're going to face every single day. Lots of things that go great, lots of things that actually don't go great, and that you need to overcome. So how do you help your companies in this kind of phase of scaling? Maybe Luca, you can talk a little bit about this. So what do you do if you see, certain things working? Also, how do you react if you see certain things actually not working, right? And what can you, from your wide network of, investments, of also people that you have around, of, maybe also previous founders, bring in order to support these companies to get through the mess of actually, scaling and being successful?
Yeah, that's a great point, Fabian. I think ultimately it goes back in a way to what Reshma was saying. So it's all about talent, right? When a company get past the product market fit stage and raise maybe a Series A or even a Series B, it is now also only focusing on scaling mode, as your company has been through, Fabian, and you know very well. You do have some normal pains, and normal pains are usually connected with organizational scaling on one side. On the other side can be on the cultural side, because you're bringing on the first new, call it C-levels or executives that might not be exactly the same in terms of background and age of the founders. So you have the first reaction of early employees that might not be exactly easy and ideal. And then you usually have some pains connected with the sales motion that needs to evolve, finding new channels, finding new areas for the company to grow and thinking about how to expand and how to be efficient on all across the board. Usually the way we support founders and team broadly, it is by sharing with them somehow the mistakes we've seen elsewhere. I think this is a business on our side that really learn and improve only through mistakes. And we all do this. So we've been privileged that by having a large, successful portfolio of companies, we have seen a lot of things going bad, well, or not so well. So pointing those learnings to our funders, I think, is always valuable. And we do this in multiple ways. One is by our own direct somehow exposure to that. But the other way is what you were alluding to, which is connecting that with other portfolio companies, connecting that with potential previous entrepreneurs or previous executives that have been exactly through that challenge. And I think we do very much believe into knowledge sharing, because ultimately there's no equal stories in every startup, but ultimately many mistakes are very similar time and time again. So trying to help funders realize what has not worked well for who, I think is always important.
Absolutely, I fully agree. And have you institutionalized this in some way, or is this more really driven through, that, I don't know, you have a certain group of companies, you see certain things and you say, hey, look, I know that I have this other company seen in the past. So is this more kind of partner by partner related? Is this like a firm view that institutionalized? How do you go about this?
It's a mix, actually, and it's a very good question, Fabian. It is still partner by partner when it comes maybe to specific sectors, but it's very much institutionalized when it comes to broader topics. For example, sales and marketing scalability, or go-to-market refining, or hiring first talent in a new country, or expanding to the US, or expanding to Asia. I think we do have some set of broader topics where we have created somehow playbooks and already our knowledge that we can serve to our portfolio company throughout our operation teams. And then we do have ad hoc smaller things that maybe can be related with a specific sector where we just done less investment. I'm just picking insurance as an example. So we have done a few investment in insurance. Obviously, we don't have yet a deeper understanding of what does it mean to expand to a new geo because no other company has done it before. Clearly, this is a more ad hoc, right?
Yeah. And similar with us. There are certain topics where we've made a real effort the last few years to build a strong platform and to put this in writing. So this year we launched our B2B sales playbook. So sort of bringing the experience of like my partners, Bernard, Saranga, who built public software businesses as founders. And then the experience across our portfolio of 20 years of, how to do a great sort of B2B sales playbook. Also, I did a big sort of series of posts around internationalization last year. So how do we make it more scalable? How do we scale ourselves? So it's not just a kind of how many hours can I fit into a day type business. Yeah,
interesting. And what's your view on kind of some of the VCs are currently kind of building out also teams, really, that they say, really, I have a dedicated, like you said, sales and marketing team or internationalization team. So people that really we pay for as the venture capitalist, but they do nothing else but go from company A to company B to company C and just help them to scale, so that you really have, let's say, a team of, 4 people that comes into the company, learns about what the challenges are, learns about the industry, learns about what there is, and then supports the company to kind of overcome these challenges. I don't know, is that something that you see also for yourself? What's your view on that?
Go ahead.
Reshma, ladies first, you go.
I think that's a fascinating topic. And I think, Fabi, you're too young, but having as old as I am, like having, been through Venture 1.0 nearly 20 years ago, 15 plus years ago, it's like, I've seen that model before too. And I think things have changed dramatically now in terms of cost basis of the venture model itself, that, that you're not sort of providing office space necessarily for your companies and hosting and then stuff, which is, the cost has dramatically changed. But you still have to like pull yourself back and not do too much. And so we feel pretty strongly here at Seedcamp because we had to do a lot of building this sort of work, just again, given a higher volume of companies at the beginning is, we find it much more effective and again, more scalable and productive for everyone, including the startup itself, to do the job of sharing knowledge and enabling kind of that and enabling those networks and those connections, and rather than any kind of stepping into a lot of opinion and a lot of people pushing into sort of, this is how you should do SEO, this is how you should do marketing, this is, you need to have that talent in-house. And I think again, the founder community and the operator community who hires well and gets people in the right functions and the right kind of A+ talent really, pull on our services to do that. But they are all about sort of taking on the connectivity and the sharing, rather than tell me what to do, tell me how to improve my XYZ, right? So I feel pretty strongly and there's a tendency for the weaker kind of teams to want to take on more of just tell me what to do and how to do it, which we don't want to enable or encourage.
You need to figure it out yourself, right? So that's the way you learn, that's the way you grow, that's the way how you're, I guess, going to be successful also. And Rob, did you want to share anything else?
Yeah, I was just going to say, my first job was as a management consultant with Bain & Company. And that's definitely with a sort of healthy skepticism of this model of like, you dive into a company and do 3 months work and solve it and leave a report and walk out the door. It doesn't work. The companies have to build their own strong capabilities in these areas. I think what we can be is a good sounding board. So adding to what Reshma said around the community and the connections, we also have a really senior head of legal, and he can be almost the senior partner. So our portfolio companies have their own head of legal, but Andrew is kind of significantly more senior than. So when they hit a knotty issue, then they can ask Andrew for his views and get his take on it. So being that kind of person you can bounce an unusual situation off. I think what we can do well is the things we see a lot of that the companies see less of. So funding rounds, we see a lot of funding rounds. We see a lot of exits. Those are areas where we can really sort of take more of a lead.
Yeah, and let's pick up on that point. So we see lots of activity also across the world, especially in the US, right? We've seen many IPOs recently, especially also kind of in my industry, kind of in the insurtech industry. There have been many successful IPOs happening. We hear Airbnb kind of coming out relatively soon. We don't yet see this so much in Europe. Kind of what's your view? Kind of do you see this also happening in 2021 in Europe, upcoming on kind of in the next year?
I think my take, we've had some massive exits in Europe. So Adyen, Spotify, kind of 20 billion plus. One of our companies, the Hut Group, IPO'd in London a couple of months ago as a £7 billion IPO, heading sort of pretty quickly north of there. So it's absolutely possible to have these 10, 20, 50 billion exits. When we're seeing the determination of these companies to stay independent as well. And so I think a big piece of the Hut Group have been very focused on is they did not want to be acquired early on, and they want to stay an independent public company. And so we're seeing that real drive from European founders.
Great. And Luca, maybe to you, what do you see as the industry that will see lots of IPOs potentially coming up in 2021?
I mean, I think this one that we are focusing on today, I think easy to assume that in 2021 we will see a bunch of European fintech IPOs. I have no doubt. I think there's obviously a healthy pipeline of great businesses that have, as per Rob comments, have decided to remain independent and have created large operations that are really ready for the markets. But not only that, I think we do see, frankly, the level of ambition from European entrepreneurs that really got high significantly. And I think ultimately you need to see this because founders like yourself, Fabian, decided that they want to take a bigger challenge early on in their lives, right? And so now you're not satisfied anymore potentially by a few hundred million exit, but you're really thinking about creating very large business since the foundation. And for doing that, once you hit the right strategy for nailing large markets, like many of your fellow entrepreneurs in Europe are doing at the moment, I think there's clearly expectation of many potential IPOs to come, and not just in 2021. I think it's more a trend. And we also finally cleared somehow the paradigm that in Europe we cannot have local sizable tech businesses IPOing. I think we're now having multiple of examples in very different stock listing venues. I think we do have now not just Spotify and Adyen, as Rob was mentioning, but think of Germany. In Germany, we do have Deliver Hero, we have Zalando, HelloFresh, and a few other tech businesses that are 10 billion plus. And we are now seeing potentially in the Nordics something happening. And beyond the Nordics, I think we will see other IPOs, even in different countries in Europe. I think it's great to see this.
Yeah, no, I mean, I agree. And I think I know our audience here, will skew a little more Southeast Asia. So I just wanted to kind of, plug the European Tech Trends report that just came out with Atomico and Slush. I think if the audience kind of wants to read up on this, heavy bench of European, European companies that are multi-billion and that are poised to go public and continue to stay independent and go bigger, that's a great place to look, because you can see the massive growth that's happened just in the last 5 years in that deck, of companies that will be ready for that. So I agree with Luca. It's not also a 2021 thing, but a longer term trend as well. But, always comes down to markets. Like it's, watching kind of what Snowflake, the enterprise space is really interesting as well. Watching what Snowflake's been doing in the public markets, DoorDash as well. It's very encouraging, but it's also thinking about like, how do those companies perform? Post, right? A year post, 3 years post, 5 years post. So I know I do think we think about timing as well as a crucial part to this IPO journey.
Yeah, for sure. And I think there's lots going on, as you say. I mean, fintech is really the hot space. Obviously, I spend a lot of time on insurtech, especially in this space. I've seen a lot. There was the successful IPO of Lemonade, successful IPO of Root. From what I hear, obviously, people are turning towards Europe with this now, right? That people are saying, okay, there's the next wave will come either from kind of Europe, or also we're hearing from parts from Asia, which is obviously super interesting. And I enjoy having these conversations. And people give you a lot of kind of support in this, especially kind of in insurtech, as the markets are super large and the opportunity is very large. And now with the back of having these kind of successful IPOs in the US, right, I think this could also support this trend also going towards Europe. But that's my view. Let's talk more about your view. So what do you think are the major kind of trends within fintech in 2021? Maybe Rob, you want to start?
Yeah, happy to. So obviously, I really believe in insurtech, as you know, and they've been talking about insurtech for years. And I think, what's great now is we're seeing these companies come through. wefox, Zego, Luca, they're all like really coming through and in some real scale now, which is great to see. And I think there's so much more to be done in insurance. So that's definitely one. I think the second massive area across all our portfolio is ESG. So we put a lot more focus around ESG over the last year. We released our sustainable future goals. And how does that apply to fintech? So all fund managers now care about the ESG setup of their companies. How can they best get a sense of that? What's the best sort of ESG reporting for them to have? Or financial wellness. How can we really bring financial wellness to people? So I invested a couple of years ago in a company called WageStream, focused on bringing financial wellness to your employees, or Clio, which focuses on the kind of lower income, Gen Z. How do you help those people get control of their finances? So I think that's a big continuing trend, is financial wellness and ESG in general as applied to fintech. And the final piece. I'll stop there. Too enough.
Yeah. I'll just build on that, on what Rob just said, because I share with him. Those are two very interesting trends. I will add, connected with financial wellness in general, everything related to thinking more about savings. I think in Europe we are coming from a culture of very conservative savings mentality that unfortunately needs to wake up to reality of a different ecosystem with interest out there that have been negative or not, if not negative, very close to zero. So now consumers are forced into taking a bit more care about their future savings. So I think we're seeing now the bulk of interesting companies navigating these trends. And I'm thinking about Trade Republic, for example, in Germany, or Free Trade in the UK, and a few others all across Europe that are trying to help consumers not just invest on a speculative way, but really thinking more on the long term. How can they think about preserving their wealth and creating wealth for taking care of the pension and beyond that, and of their families? Maybe another very interesting trend is connected with payments. I think we've seen a lot of room for improvement of the current payment infrastructure globally. And I think this is kind of unique in terms of opportunity, because we do see all across the board, being that Asia, North America, or Europe, that is room for improvement of the current infrastructure. And we're seeing now very, very sophisticated teams tackling that challenge. Connected with that, maybe more tailored to Europe, we're seeing the opportunity of maybe going after traditional credit card circuits and networks. I think now can be the moment for leveraging better infrastructure and better set of regulation for creating alternatives. I think we've seen that happening in Asia. Obviously, all of us is aware of the great success coming from companies such as Paytm or WeChat Pay and the likes. I think we haven't seen anything yet that can go in that direction in Europe, but I think now is more somehow prolific moment in history for doing that.
Yeah,
I think those are other examples of what we have in our plate at the moment.
No, I'd love to pick up on that sort of last point. Is that I think if you take that all the way, kind of up to the 10,000 foot level, is the movement, kind of everything software, right? Software lead the world, and there is I think that movement, and also in the startups we're seeing is that view around everything is payments. Everyone's a fintech. Every company is a fintech. So if every company is a software company, it's also a fintech software company. And so I think to Luca's point, that there is that sort of Cambrian explosion around. That's why you see in payments. You see sort of a lot of thought given to how to fundamentally kind of innovate and change some oligopolies, monopolies on that, and just do things very differently, right? And so it's just fascinating to see a lot of leadership from companies like Revolut and Stripe and others. I think we'll just see more and more of this sort of view around every company in the world is a fintech company, and what is the power of software to and machine learning and a lot of intelligence to sort of empower that and bring it all again to the hands of 7 billion of us out there. So it's a fascinating time for financial fintech.
Yeah, and Reshma, you're investing a little bit earlier than these guys here that we have around with Luca and Rob. So you mentioned also companies like Revolut, but also Trade Republic, who are younger. Do you see any kind of curated models there also on the rise that are focusing on what Luca said in terms of using your savings also in a way to invest into markets that is more, let's say, in its infancy compared to the companies that are a little bit more advanced by now and have raised Series A rounds?
Yeah, no, absolutely. I mean, I think, and actually hinting at sort of hey Fina, that you're also good one. I subconsciously picked that up. Hey Fina is really interesting. It is looking at, we do think a lot of these platforms are very certain voice driven, right? Male driven. And I think incorporating 50% of our global population in a much better way, who actually holds a lot of the, proverbial purse strings as such, right? And has control over money. And I would definitely say a lot of the platforms we've backed ourselves just don't talk to that base in a very good way. And so, absolutely companies like Hey Fina and a few others, which I won't share because we're trying to invest in them. So I don't want anybody else jumping on them. But yeah, it's absolutely an area we've been investing in for a while. Wealth Kernel is another one, which is actually providing wealth management software as a service to exactly help companies that want to launch kind of the wealth management products and features alongside their offerings. So it's a very active space, even at the very early stage. And I think it is that opportunity of Europe waking up to saying, just our pensions squared away and in very low growth assets isn't going to get us there. And pensions themselves are opening up, right? So we've had the biggest pension fund in the UK become a limited partner in our own fund and looking at direct investing as well. So I think it's awesome to see like government and pension sort of unlocking, and then actually right at the retail level of us day-to-day people going, hey, I want my pension to do more than just sit there like oil and gas, or I want it to grow more, and also I want it to be in future positive sort of industry. So exciting area for sure.
Yeah, great. No, thanks for sharing here. If there's any questions from the audience, now's the chance. I haven't seen anything come through, but now's your chance to grill these guys. I won't stop you. This time here, I'm on your side. If there's any founders out there who want to ask one of these guys the tough questions, feel free to reach out right now. Now's the chance, basically, to speak up. And while you're thinking, while we wait, maybe what's the very short advice that you're giving out to your companies for the next year? So, Luca, Rob, maybe one of you wants to start. What is it that you say? How do you get out of 2020, and how do you tell your companies what to watch out for in getting into 2021?
I think very quickly on my side is all about really continue building foundations, regardless of the stage you're at, whether it is a pre-Series A or post-Series A or post-Series B. It's always about thinking a bit more ahead, in a couple of steps ahead. So we keep saying this to our founders: think more about what is missing in your team, what is missing in your product, and over-invest early on into those variables, because usually that will help you yield results, not just in the midterm, but most important in the long term. I think this is always good advice at the end of the year, reminding entrepreneurs to think a little bit beyond the next year.
Yeah, that's great advice. I think the other thing is what our companies have shown really well this year is their ability to react very quickly to a completely different changing economy, a completely different way of doing things, and keeping that ability of flexibility of being able to move very fast. That's the core of what gives startups a huge advantage over large companies. So keeping that mindset, I think, is really important.
Yeah. Reshma, how about you? What is it is it your advice? Is it also very much focused, agility, team? What is it kind of for these younger companies that maybe are within your portfolio that you are giving us advice?
Absolutely adaptability. And I think, again, kind of the stars rising is, you've seen that is adaptability to going, if you were very office physical centric, to that remote work, and how do you, again, keep and push the culture forward in that new hybrid world. And I think secondly is we did have companies through that first lockdown and as kind of 2020 has evolved, is they didn't sort of step back. If they saw customers coming and that pull for their services, they sort of, went all in, right. And continued to go through 2020, capitalizing on that digitization and move towards digitization. So I think sort of continuing into 21 and beyond, as Luca was saying, is how do you keep pushing that pace, because especially for a lot of the B2B companies, SaaS companies, it is a new world where a lot of playbooks are completely rewritten in where their customers sit, right? And so there is so much of a desire and a need to adopt a lot of products our companies are offering. So I think just like don't look back. I think looking forward and pushing even further into growth and scale.
Yeah, thanks. I need to stop you there. There's a lot more to talk about. Thank you all very much. Our time is up. I think I was pretty nice to you, so
Yeah.
There wasn't the super grilling question, so we keep them for next time. But thank you very much for you all for joining today.
Thanks, Fabi.
Right.
Thank you, Fabi.
Thank you.
And thank you, Fabian, for moderating that panel. To the button. That was venture capital behind the scenes, and that investor panel getting a good cover of how 2021 will be for investments.